Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up's for Monday, the 5th of April, 2021, just after 6:30 p.m. Central Time. Now, we've moved on to the June gold, so if you're trading April, you can get delivery. You're in delivery month, so time to move on there. You can still be okay in the May silver. The stellar performer was copper. It simply said anything in the low 390 area looks cheap. And that's the way I think you have to approach that market. Platinum market's still acting pretty good on its own. In fact, there too. Stock market up, why? Well, as you know, Friday, the markets were closed for Good Friday Day, except futures. They were open early in the morning, and I mean early. They closed quite early. And they got to see the jobs data. Over 900,000 jobs. There's talk that maybe we'll get 1 million plus on other reports. I heard today somebody say 2 million can happen. Who the heck knows? The important thing is the market is dealing here with the idea that we're reflating. The economy's coming back. Data that, as you see, you can get pieces of data from February that come out. The market doesn't even pay attention to them. It's already looking so far forward it doesn't care about a month of February. Keep that in the back of your mind. Dollar today down hard against a number of currencies, and it was interesting too because Goldman Sachs threw in the towel today in their notes to clients. In fact, I watched an interview today with one of their analysts on TV, and they don't think they're wrong in the long term, but the COVID situation got them in the short term. They thought that Europe, as most people did, would get the vaccines out way better than they have in the first quarter of the year than they did. And of course, the new lockdowns in Europe don't help matters, so that is why they're coming out of that trade. In the end, I think they'll be right, but you've got to get those vaccines out first. When we look at a weekly area chart of closes in gold, you're still under the 18-week average of closes, which means the bias in the market is down. You haven't bounced very far off the lows so far. You've had a low here in the 1680 zone. We're back up to 1730, so it is a $50 rally, but this is where it gets rough. The reason, if I step back here, you can see this pattern right through here. So now to get through that, you got to grind your way through it, and that's what the market is trying to do. What about the swing lines? Well, the swing lines are still in a downtrend, which means the pattern is still one of lower highs, lower lows. Now, when I created the swing lines, what I did is I take the current day's action and I look back one bar. And I'm looking to see, is the market making a lower low, a higher high, an inside day, an outside day up, an outside day down. And I assigned rules to each one of those patterns to form apexes. On those apexes, I can at least have a mathematical way that makes, to me, sense. I'm not just judging where's the top, where is the bottom. And with that, I see the market still in a downtrend. Take out this high. You negate it. Can you turn the trend up right here? No, you can negate the downtrend. You can't turn it up on this pattern. Now, what the market is fighting to do is stay over the 18-day average of closes, but it's really just fighting at that number. And how often do you hear me say, when you are down far and you come back up, you'll fight at that 18-day average. If you get up, this wasn't the best one because it didn't work that way. It fought the battle back over here. But if you go back on the chart, you'll see more times than not, that's what occurs. A lot of these rules, please understand, they're meant to be most of the time. I don't know a rule that works all of the time. You might, I just don't. But anything that to me has got a very high probability, I look for. And high probability is more times than not, you get a big break, you come back, you fight at some zone to figure out what to do next. That's what we're doing. The other thing you look at is where are the Bollinger Bands. Why? Remember that Bollinger Bands are an algorithm designed to keep the market within them 95% of the time till they break out of them. They will only stay out of them 5% of the time, but in that process, I'm looking to see if I have anything narrow here. Unfortunately, I don't, but think of it right here, and this isn't a great example, but eventually it bursts out and pushes the band one way or the other. You're not at that phase, you're right here. I talk about that in my enhanced Bollinger Band course. Just go to our website, www.iraepstein.com, under the word research. Everything's there that you need. and it's called the Enhanced Bollinger Band course, and I think you'll learn a lot from it. Now, what you want to do with it, that's up to you. As for momentum, I have momentum up. I have bias because you're over the 18-day average up, but I have the swing lines down. So the market not in sync for a trend. You now have to move to the June gold versus the May silver, at least I do. You don't have to do anything, but that's what I'll be watching. And that's because, to me, why would my clients trade a June gold? They're going to trade the May silver, so I look at that ratio. And right here I can see that silver is still what? Losing to gold. Anytime you're over this 18-day average and going up, you need more ounces of silver to buy an ounce of gold. Get under it and go down. That's where silver gets stronger. So that's not the strength in the silver. You get to see that on the chart. And what silver's really doing is it slip-slided through the Bollinger Band and the 200-day average. And now for the past 2 days, it is fighting at what it slid through, right through here. You see that 200-day? And I can show you where the battle was. This is good to do. Right here is the gray line, the 200-day and the lower Bollinger Band. You start fighting at it, as you can see. Now you slid through it. Well, on the way back up, what was a temporary support could become a temporary resistance, and that's exactly what you're doing now. In order to negate the downtrend, you've got to take out the high here, but even then you have 2 layers of resistance, the 18-day in red and the 2572, the 100-day average. Who's controlling the market right now? Nobody. While the trend is down and the bias is down, I call the momentum going up from the slow stochastic. Copper's just saying 390s are cheap. But remember what I call this trade. I called it the psychiatry trade. And the reason is when you narrow in these Bollinger Bands like this, what do I tell you? Get your psychiatrist phone number next to you. Because you'll be asking yourself, it's going to pop through, it's finally going down. Nope. Then you'll say, oh, if it goes up, it's going up. Doesn't have to. You're just churning right now. You're also overbought in an uptrend. Target the 420 level, let's call it. When we come to the palladium market, you have a pattern here. I still didn't fix this. This is my mistake. This is not right. While it is pointing that you're coming up here, you truly have the lower highs and the lower low. So you have the swing lines in a downtrend that is negated if you take out 2687.50. Maybe this is telling me what the future is going to be, that arrow is going to stay there. Could be. And that you have a market that when I look at it's already in overbought territory. I define an overbought territory in slow stochastics, any reading over 70. The next thing I go to is the dollar index, which today lost its uptrend. Now you have the swing line pointing down. Lower highs, lower lows. You lost the embedded reading that often leads to a challenge of the closest moving average. In this case, it will be the 18-day average at 92.35. But is the trend validated? No. When you're over the 18-day average, the bias is up. So I've lost the embedded reading. What I think the pros can do and might do, they're probably going to sell the dollar index up here. Stops over the most recent high and see if they can get it back to that 18-day average. But that's about all that I'm looking for out of it. And last, in your Etherium April contract, and I'll deal with April just because it's a new contract. I don't have anyone that's trading it anyways, but that I know of in my company. That doesn't mean they're not. We've got a good-sized company. Higher lows, higher highs. You're over the upper Bollinger Band. You're getting a little extended here, trying to get some history in the charts, too, with what this all means. But it's certainly an uptrend, and it hasn't gone away. Remember the Bollinger Band course? We have an ad on it now coming up. All you need to do is go to our website, www.iraepstein.com. Name of the game. Research, education. Go under education for the Bollinger Band course. Have a good one. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.